So this tutorial is for folks who have money that you want to invest but don't know how or where to start. In this video, I'm going to describe step by step what you need to do to take that money and go buy some stocks with it. I want to begin by first explaining what stock is. To put it very simply, stock refers to shares of a company that you can purchase. So when you buy a company stock, you become a partial owner of that company. If you buy very few shares, you might own 0.0001% of a company. And if you buy a large number of shares of a company stock, then you could be a 10% owner, a 30% owner of the company, and so on. You get the picture. Some companies are private though and might be owned by family members or people who started the company. So you can't buy stocks for those companies. For example, Mars Inc., that makes Mars candy bars like Snickers and M&Ms, is owned by the Mars family. Mars is their last name. But for companies that are publicly traded, anyone can buy the company stock to become a shareholder and partial owner of the company. The same idea applies to funds. So when you buy shares of a fund, you are buying ownership of whatever mutual fund or exchange traded fund that has been created and is managed by an investment company. So once you know which stocks you want to buy, where do you go buy stocks? You can't just drive to Costco and buy some stocks from there. The first step is to open an account with a brokerage firm. What's a brokerage firm? It's a company such as TD Ameritrade, Fidelity, M1 Finance, Charles Schwab, E-Trade, Robinhood, Webull, and so on that provides a platform to facilitate and enable market transactions. In other words, they have a website that you can log into to buy and sell securities. Securities are stocks, bonds, and funds, and so on. In order to do that, you need to first open an account with them. And opening an account is free. So pick a brokerage firm, go to their website, and just sign up. If I had made this video 3 years ago, I would have said, make sure to pick a brokerage firm that charges no fees and no commissions for buying and selling stocks, because until about 2 or 3 years ago, some brokerage firms charged anywhere from a few dollars to $20 every time you bought or sold stocks or other securities. But now, pretty much all brokerage firms have gotten rid of those fees and offer free stock trades and free ETF trades. Selecting the best brokerage firm will be based on other factors, which I will go over in another video on how to choose the best brokerage firm. Also, just like the way some banks require a minimum initial deposit of, say, $100 or some set amount to open a savings account with them, some brokerage firms require minimum opening balance, say $1,000 or some other amount to open an account. But most of the brokerage firms don't have a minimum deposit requirement. Now, different brokerage firms charge other fees for various services that they provide. But for now, if you are eager to get started as soon as possible, just picking any of the big name brokerage firms should be fine. And if you change your mind and want to go with another brokerage firm, transferring your investments to another brokerage firm is very easy to do. Also, you can open an account with lots of different brokerage firms, and there's no limit on the number of brokerage accounts you can have. But you wouldn't want to have your money and your investments spread across different accounts because it's more work to keep track of and manage all those accounts. When you open an account, most folks will open an individual account, but you can open a joint account with a spouse, a custodial account, an IRA account, which is a retirement account, and so on. Now, you can't open an account by yourself if you're under 18 years of age, so you're going to need a parent or a guardian to open an account for you, and they would open a custodial account for you so that you can start investing. After you set up an account, you would then need to put money into that account. You can transfer money into and out of a brokerage account just like the way you would put money into and out of a bank account. You can mail a check to fund your account, but it's much easier to just transfer the funds from your bank account to your brokerage account electronically using ACH transfer. So once you're logged into your brokerage account, you would need to enter your bank account information and then indicate the amount you want transferred so that you can fund your account and start buying stocks. So now you put some money into your account. Let's say you deposited $200 to invest. You need to find a company whose share price is no more than $200. And there are tons of great stocks that cost less than $200 per share. But if you have your heart set on buying some company stock whose price is much higher per share, then you would need to find a broker that allows purchase of fractional shares. Let's say you really want to buy Amazon stock, but as of August 27, 2021, Amazon closed at $3,349.63, meaning the price of one share of Amazon stock was $3,349.63 when the stock market closed at 4 p.m. Eastern Time on that day. So you can't buy even one share of Amazon stock with $200, but if you open an account with a brokerage firm that allows you to purchase fractional shares, you can purchase a fraction of one share of Amazon stock with your $200. And there are many brokerage firms nowadays that allow you to purchase fractional shares. Oh, here's a funny story. About 20 years ago, I wanted to buy some Berkshire Hathaway stock. That's Warren Buffett's company, by the way. I noticed that it was $7,200 per share. So I thought that's way too expensive and decided not to buy. Anyway, I was talking like I was some savvy investor and told my brother how Berkshire Hathaway Class A stock is so expensive at $7,200 per share. And he's like, "You don't know what you're talking about because their stock price isn't that cheap." And I looked at the stock price again and realized that it was actually $72,000 per share. And I felt like a fool talking as if I knew what I was talking about. It's because my brain couldn't make sense of one share of a company stock costing $72,000 and just read it as $7,200. Anyway, I noticed that Berkshire Hathaway Class A stock closed at $430,901 on August 27, 2021. Anyway, once you have money in your account, you can start placing an order to buy whatever stock you want to buy. In order to do that, you need to type in the ticker symbol. So for Amazon, the ticker symbol would be AMZN. You can search for the ticker symbol by typing in the name of the company in the search box in your brokerage webpage, or you can just Google it. Once you have that information, you go to the order page and put in the ticker symbol, and you enter how many shares you want to purchase. And then you have to decide what type of order you want to place. For most people, you want to place either a market order or a limit order. So what's a market order? That's when you are requesting that your order to buy get executed immediately at the market price. That means you want to buy at whatever price is the best price at that moment. So let's say you want to buy 20 shares of stock in company A. As soon as you put in your market order, if the best price you can get is $10 per share, then your broker or brokerage firm will buy 20 shares for you at $10 per share for $200. Your account will show that $200 cash is gone, but you have 20 shares of stock in company A, and your account value will be whatever those 20 shares are worth at any given time that you check your account value. How is the best price determined? It's based on the price that people who are selling their stock in company A are willing to accept. So if the lowest price that someone will accept is $10 per share and they have 20 or more shares to sell, then that's what you will pay to buy their shares. A limit order is when you put a limit on what price you're willing to pay for the shares. So you would enter the highest price you're willing to pay. Let's say you put in a limit order for 30 shares. You will then be prompted to enter the price for how much you want to pay for each share. To help you figure this out, the brokerage website will show the stock price per share in real time. So it'll show what price other buyers are bidding for company A stock and what the sellers are asking for that stock. Now, let's say you put in a limit order and the limit price at $5. That means you want to buy only when the price is $5 or less per share. The problem is that unless there is someone willing to sell their shares for $5 or less, your order might not get filled. Now, when you put in a limit order, you also need to select the time in force. For most people, you want to select either day or good till canceled. So time in force is how long your order will remain active while they try to fill your order. If you select day, then you are giving your broker or brokerage firm 1 day to try to buy company A's stock for $5 per share. But if the stock price never comes down to $5 per share, meaning there's no seller who's willing to accept $5 per share, then your order will not get filled and it'll get canceled by the end of the market day, which is 4 p.m. Eastern Time. If you select good till canceled, then you need to also indicate the cancel date, and that could be any date in the future. So let's say you selected a date that is next Friday. Then they have until next Friday to try to buy company A's stock for $5 per share for you. So I think that's it. I think I've covered all the basics to get you started. And if you have any other questions, just let me know in the comment section below.